gets that.
All right, what's good, everybody? Finally got this thing set up. We are jamming now here. We got increased speeds, uploads and download speeds. All of the internet's been fixed. It's been a bit frustrating, but we got through it. So speaking of frustrating, we're going to dive into the markets today. I'm not going to waste a lot of your time. We've got, let me pull it up. We've got on the charts there, the Dow. There we go. We've got the Dow closing lower on the day by 423. The Dow started higher. We were up by triple digits this morning, and it started selling off as the day progressed, slowly and slowly. Very controlled sell-off. That was something interesting to note. There was no like catastrophic sort of quick sell-off, any panic in the market. It was just a really slow and controlled decline on the day. So that's the Dow. The S&P, actually, let's go back to the Dow. The Dow, Caterpillar and 3M were your big focus stocks in the Dow. Those were your worst performers. Caterpillar basically came out not too bad on the earnings front, but they came out and said, hey, that's probably the best it's going to get for the year. They set the bar much lower, right? They said wherever we're at right now, it's not going to be any better for the rest of the year. And investors did not care for that one too much. The stock was higher. They did beat estimates. They did beat the full year profit forecast, but investors not too happy there with those comments. And then 3M, that one hit nearly a 6-month low, actually a 7th-month low, right? Oh, where are we here? Yeah, 9 months actually. If we go all the way back, that's 9 months before touching this low back here. The stock was down 6.8 on the day. They reported earnings basically in line with expectations. But the company also lowered their full year guidance and projections going forward. Investors don't like to hear that. So the stock was down 6.8%. Those are the two names in the Dow that really sort of pulled on the Dow today. The S&P back to the all-important 200-day moving average. The S&P fell 35 today. Lots of mixed names in here. You've got the banking stocks and the semiconductor stocks or tech stocks that were down today. If I take you over there real quick, it's nothing new. It's nothing exciting to say, oh my God, the bank stock sold off. We need to panic. Basically, look, it's just been sort of sideways here. The banking stocks just had a bad day in what has normally been a good day, bad day sort of chop. So I don't have anything exciting to say about that. I don't like that the tech stocks are starting to break down in here. We'll take a moment and go through the FANG names because if you're watching financial media, you're going to see that in the news. Facebook down almost 4%. That's the that is the F in FANG. Amazon down 4%. You sometimes squeeze Apple in there. They were down 1 1/3%. Netflix, that was almost 4. Actually closed the day down about 3.5%. And then Alphabet was the ones that actually reported their earnings down 5%. Costs were higher. Very simple on Alphabet. They had good earnings. Everything looked great. Costs were higher. People don't like to see that. They had great ad revenues, by the way. But because of increased costs, investors chose to focus on that. We'll go over to Coca-Cola. There's a lot of earnings. We could go on and on here. Coca-Cola moving down to yearly lows here. The stock was down 2% on the day. Earnings were a little bit better than expected. Nothing crazy. They had comments about taking a hit over British sugar rules, right? They're starting to crack down over there on the soft drinks. And freight costs in the United States were up a little bit. Investors did not like to hear that either. So let's take a quick look here across the markets. Again, important number we're looking at is the 200-day moving average. Any technical trader is going to want to see the market stay above that. Where's the Nasdaq? A little bit of room before hitting the 200-day moving average. So not crazy there. Also, I should point out this started off as a bit of news in the morning, that 10-year. Oh, it actually finished down on the low too. The 10-year broke above 3%. So the 10-year note, if you keep track of that, broke above 3%. People, any whole number for a stock, for an interest rate, anytime you hit a whole number, always psychological, so they say. But midday, it actually recovered and started pulling off those lows. Obviously, at the end of the day here, it did close near the lows. So 3%, get used to it. Higher interest rates, and that's about it. I said I want to keep this one short for you today. I apologize for being late. Now that we're humming, we got everything going quick, everything all over the office, wireless, and everything's moving quick and clean. So our live broadcast, we're actually going to step it up. We're going to start doing more live broadcasts with different topics, let you guys participate a little bit as well, or maybe even an Ask an Advisor type of broadcast We'll see what we can do. Now I feel like I've got the world at my fingertips now that our internet's working great here. Snell's asking, is the stock market in an overall decline still? This is rather interesting, actually, and I'll take you can look at an ETF, you can look at futures or whatever you like. Right now is a technical trader's market. And what I mean by that is the people that use these charts to trade, they're sort of dominating. They have the upper hand. They have the support areas, meaning the areas to buy and to sell. And so right now, every technical trader is going like this. Hey, look at that. A series of lower highs and a series of higher lows. And so on the way up, this is perfect for them. They know to sell right into this downtrend. They also know that they have support very close by, and you can already see today why some of them maybe started buying that dip. And so you have this sort of pinching of a pattern going on there. We pointed it out in commodities and oil. We've seen this numerous times. So right now, it's really the technical trader. The easiest thing to look at here would be to do something similar if you follow a chart and understand that if we go above or below, that's where the real action's going to happen. So we may start to pinch around in here through this earnings stuff, but any good news or any real bad news is going to push us above or below. That will be the next sort of break in the ice or the next pop that we'll see in the markets. And to give you a good example, we did this on a commodities ETF, right? When we said the commodities looked like they were going to break out here. It's the same thing. The pattern sort of pinches in there and all the technical traders know what's about to happen. They get the upper hand. They get the most excited. Did we do oil? What was it? I forget the other one we did. XME, was it? I took my lines off, but you get the idea. So really a technical sort of market for right now. In the short term, yeah, it's in a downtrend. Long term, still in one of the strongest uptrends the markets have ever seen. Jesus, have a great pension. All right, that's nice. Just when I thought we were going to be on bull market run. Yeah, you can have some bad days in there. Don't get too overworked by one individual day. The question is, does it mean something in the bigger picture or not? And it's still early to tell for that, in my opinion. You were up 50, now up 20. Should you sell now? For what? What are you selling for? Like, if you had 50% gain in a stock and you let yourself give up that much to where you're only up 20%, that's unfortunate. We need to work on your maybe a little trailing stop method or something in particular that we could use for you to lock in more. Meaning if you're up 20, you say, okay, I'm going to lock in 10 to let it wiggle around a little bit. If you were up 50, you got to say something like, I'm going to lock in a 30% gain, a 40% gain, and let the stock wiggle around a little bit. You don't want to give back that much. That would have bugged me a little bit there, Henry. I don't blame you if you're frustrated. Long-term investing, you don't see any reason to panic. Like Jazz said, there's always a return. 100% of the time. I want to like go on every TV channel. I want to be everywhere on the planet telling people this, because if everyone knew that, there would be no reason to fear. I really wouldn't need to do these videos on down days or up days, because you'd all would just be like, whatever, doesn't matter. You know, the markets recover 100% of every decline, 100% of the time. And I love that. It's just, if you can think that, if you can remember that through the down times, you'll get excited when the markets fall. So very, very nice. Thanks for pointing that out again. I think I'm just going to start saying that a lot. Maybe I need to be more like a politician. I've got like my 5 or 6 sort of core things that I say. I think I just need to say those over and over and over again. So I got one for you. This is my new one. I just posted it on Instagram, actually. If you can show the world that you can manage $1, meaning you'll do the right thing with that dollar, whether it's invest it, save it, put it away, pay off debt, whatever. Show the world that you can manage $1, and the world will show you how to find 2. It's so interesting how you watch more and more people that come, and the more people that I talk to, the more people I find out are good with money or bad with money. The people that are bad with money and investing never seem to find their break. They never find their moment where they're given an opportunity to take it to the next level. Those of you that call and I talk with you or we email and come to find out you're really good with money, those of you that have endless opportunities to make more money. And so it occurs to me that if you can show the world that you can manage $1, it'll show you how to find 2. And it's exponential. It just keeps going. Very good. All right, I'm going to wrap it up there. Chris says 100% of the time across the market, not stock specific. Most definitely. Yep. I should add to that, if you're invested correctly, then 100% of the time you'll recover 100% of whatever the decline was. If you're just going to pick a random stock, of course, that's not true. I think we all know that. Financial investor, do I own any real estate? Physical real estate, yes. Dabbled in there. Real estate ETFs, not unless they're included in our long-term retirement. If it's a REIT, not heavy on the REITs right now, but physical real estate, yep. Snell's learning so much. I love it. Feel free to ask any question you have. I'm going to try to keep these short because what we're going to do, again, is more live classes with specific topics. So look out for that. I want to keep doing the 4 o'clock one for you here. I really enjoy doing these, so I'm just, whether you guys come or not, I'm going to do them. Hey, enjoy the rest of your day. I'm happy to be back. Sorry to be late here today. We will see you again tomorrow. Really, really cool video that I did today. By the way, just great video on YouTube right now. Posted it at 1 o'clock today. It was provided by one of our customers, the topic, and incredible. Just watch the one. If you don't watch any of the other videos of mine, watch this one today. Great video. Really, really cool way to look at it. Have a great day, guys. We'll talk to you soon.